Um, Jamie Dimon is a panelist. Steve Schwarzman is a panelist from Blackstone, and Larry Fink. But what Larry Fink said that really stood out to me, and I wanted to kind of share that with you guys. If you didn't see it, look it up. I think it's like the FIIP or something like that, or FII. Um, he was basically saying that the challenge that there's going on right now is that if they could get people to move their money out of the stock market or out of money market accounts into real assets, they would actually be better off. And then we're talking about a long-term investment. I've been saying this for a long time. So even though you have the largest asset manager or the founder of the largest asset managers on the planet, which is BlackRock, saying that people that keep their money in pension funds, retirement accounts, and money market accounts, that's really considered in their world scared money. Like when I used to sell weed and hustle on the streets and stuff, depending on where you're from, we call it scared money. Scared money don't make money, meaning like you're not going to put your money at risk or play for you to do anything. So when you have the largest asset manager on the planet saying basically all that money that's tied up in money market accounts, pension funds, retirement accounts needs to be able to move into real assets will always outpace paper assets, period. Assets as relates to the stock market, Wall Street, ETF, the way that money, the way that world moves. And because that's volatile, it can go down in a day. If President Trump tweets something out, or he goes on Truth Trump on their Trump network, which is the Truth Network, or he goes to Twitter or he goes on Instagram, the stock market can tank. We saw that 2 weeks ago. He posted something about China, and all of a sudden the stock market lost trillions of dollars in a day. And then he came back and said, "Hey, they've given up and they're going to do what we want them to do based on tariffs." And all of a sudden the stock market rose again. Now, I don't have time to sit around with my money and buying a dip. And I'm probably sure that my financial advisor that's managing our capital, which is what Larry Fink was talking about, is not trading that way. He's not trading your accounts. So what he's meaning by taking your money and move it into real assets, which is what we do at Bell Capital, is we're looking for the everyday investor to take your money out of your retirement account, out of banks, out of savings, out of your pension fund, your qualified 401k, if you can do that, and move it into a real asset that, number one, gives you cash flow, gives you passive income. Number two, it's going to give you controlled appreciation. You can't control the stock market. Like I said, if President Trump goes on Twitter right now or X and tweets, stock market can tank. It can lose 500 points in a day. You can't outpace that. And you don't know what he's going to do, right? So knowing that you can't control your controlled appreciation in your investments, you need to move it into something that has steady Eddie money, which is what we say is like it's long and it just keeps on going, but it keeps on going and it keeps on going in a projection that it goes up. That's what that is. The other thing is you need tax advantages. So what they don't always talk about is the tax advantages because they're not concerned with your taxes. You are responsible for your taxes. As a matter of fact, Bill Ackman said it. He was like, the government can kind of do what it wants. So the government can control how much taxes you pay. The government actually owns 50% of the American public's income. So I said that, I mean, when he said it, I was like, dang, dude, that's crazy to say it that way. The government owns 50% of your income before you get a dollar. And they have the ability to lower the tax rate, change the tax rate, because they already own what you're making. So if you move into real estate, you get to play by the game that they're playing by. You move your money into real estate, and the real estate that pays you, you get to offset that using the same tax benefits that the government wrote up to say that you don't have to pay because the government uses those tax benefits to do that. So that's huge. But the big picture here was just the simple fact that someone playing at the top of the food chain is also saying, hey, you need to move your money into real assets. Now, are they going to move your money into real assets for you? No. They're going to create a financial product that says, hey, let's use real estate. Let's use a real asset. Let's bundle a bunch of companies that own these, and then we're going to sell them as a financial product to the market as shares, right? An ETF. An ETF that owns a bunch of real estate or has a bunch of stock companies or mortgage-backed securities or something that they sell you is not actual real assets. It is packages of real assets sold to US stocks. It's not the same thing. So even he's saying that doesn't mean that what he's doing is how their company's structured. I mean, he has a company to run. They have a firm to run that runs the world. They're not going to stop what they're doing. Even though they fund real estate activities, they turn around, fund the same real estate that we look at, and then they turn around, turn it into paper, and then sell it to you guys.